already in recession. But I have to say, we have two economies. We have the economy of the 1% at the top of the food chain. They have no worries. They are the wealthy people. And then you have the economy of 80% of the US, so 70% of the US, who are lower income recipients. And the lower income recipients, their wages do go up, but the wages do go up less than the cost of living. We measure GDP, an economy, in two ways. Gross domestic product and gross domestic income, GDI. GDI is going down in real terms. So, in my view, for 80% of the US and 80% of the world's population, for them, they are already in recession. Maybe it recovered from the lows of the COVID crisis, but I observe when I travel and when I move around cities that business has not recovered to the 2018-2019 level. Now, someone in New York will come and tell me whether restaurants are full. Yes, because half the restaurants are closed. They have increased interest rates, but at the same time, they have created liquidity. They have taken liquidity away through the reduction in the balance sheet of the Fed, but they've created liquidity in the sense that they lent money to the regional banks. And liquidity is a very funny thing. The poor guy on the street, the homeless and so forth, they have no liquidity except the subsidies they get from the government. Normally from Democrats. But wealthy people have plenty of liquidity. I have plenty of liquidity. I have no liquidity crisis at all. But as I said, I know lots of people, they don't have a penny in their pocket. It's tragic. I know people who work in nightclubs. I tell you, they have no money, zero. But it's actually a tragedy how unfair the whole policies of this ESG and so forth have been, because they penalize through inflation ordinary people and enrich wealthy. I think we haven't really had a crisis yet. We had regional crisis in the sense that, the crisis, the cause is the decline in the value or the collapse in the value of commercial properties. They have really imploded, and it was sort of to be expected because of several trends that are permanent trends. First of all, more people will work from their homes. More people can work from their homes. And two, the economy is not growing all that much. So the requirement for additional office space is not growing that much. And new cities are coming up and supplies have come up and so forth and so on. So that was to be expected. And that hit regional banks. But the Federal Reserve, which is in charge of basically the banking system, they, as financial supervising authorities, they should have seen this. But no, they were all sleeping and looking at their mobile phone and the Facebook profiles and listening to speeches of other idiots at the Fed who tell them a nice story about something that has nothing to do with the reality of the real estate market. And it's not the first time. Janet Yellen was the president of the San Francisco Federal Reserve when the whole real estate boom collapsed in 2007, 2008. And she was not only in charge, the San Francisco Fed is not only in charge of California, but also of Nevada and of Arizona. The areas where the real estate market collapsed the most. But Yellen, she didn't see that coming at all. In fact, she always maintained that property prices would be stable. My sense is, for now, there is a bit too much enthusiasm in the market in terms of bullish sentiment. But at the same time, the Fed, in my view, will continue to do one thing, and this is to print money. Okay, gold and silver haven't been acting well recently, but I would just, as a matter of principle and as a matter of core holding, always keep some gold and silver in my portfolio of assets. I'm not all that concerned about the price movement as the concern about expropriation. But if I just look today at the price chart of silver, purely based on the chart and based on the assumption that between now and Christmas, the woke Fed will cut rates again or stop increasing rate, and in terms of interest rates, we're still below the rate of inflation. Based on these assumptions and based on the chart, which in the case of silver is forming an inverse head and shoulder formation, the price target by year end of silver should be over $30. My action is to buy every month some gold. I don't care about the price. I just want to hold some gold. And I don't want to be in a situation where I have to make emotional decisions because it's down, I will stop buying, or up, I stop buying. I have a standing instruction with a bank, buy every month. As you know, I have a preference for precious metals, gold, silver, platinum, but I can see some advantages that Bitcoins would offer. And I just want to say about Bitcoin the following. We had yesterday the announcement that General Motors would use the Tesla chargers in the United States. In other words, Tesla chargers are becoming the standard, like a plug that you have at home is a standard in the US. It doesn't work anywhere else, but in the US it works. And so I think Bitcoin will become the standard of cryptocurrencies, and everything else. There will be cryptocurrencies that perform better, and most of them will fall by the wayside because of lack of interest or of fraudulent activities and so forth. But I could see that Bitcoin becomes an investment class, which it has to some extent already become. But as I said, for my purposes, I prefer physical gold because I'm not going to travel anymore as much as I used to do. And I prefer to have some of my reserves, including also stock portfolios here in Thailand, because I strongly believe that one day remittances will not be permitted anymore. It's already become more difficult to make remittances in the sense that the banks ask you for all sorts of details, which is really none of their business, and certainly none of the business of the compliance department. The client should ask about the solidity of banks and the reputation of banks, and not vice versa. I think it can only happen in a woke society that the bank would ask a client why he remits, say, $10,000 from A to B. The client should ask the bank, are you capable to do that, or will you steal my money?